Today I want to talk about the pivot points and how you can find them, how you can install them on your basically on TradingView, and how you can use them for SPY and SPX trading. So first of all, if you need to add them, you can go to the indicators and search for pivot traditional, or standard, basically pivot points standard. That's the best one and the easiest one you can choose. And as soon as you add them, you see these lines on the chart. So in the settings, if you like to remove some of these support and resistance lines, it's pretty much easy, and but I strongly recommend you to keep them as is. The other thing is sometimes you need to go back like more than 15 days, so you can add them to 150 days, and I think that's the maximum number you can use. Don't change the type. The traditional is the main one, and most of the programs for tradings actually use the traditional values and not the other ones, like Fibonacci or classic or whatever. So keep everything else as is, and look at the chart now, and now you can basically compare these lines and the way that they're reacting, the SPY is reacting to them. They're very meaningful. So I'm going back to this day on July 8th. As you see, these reactions are basically obvious from the first 5 minutes to basically to 30 minutes of the chart, and on that trading day. And as you see, the price is trying to cut through this resistance line, but it can't, and it is rejected, and it goes down. So basically, these resistance lines are calculated based on the pivot line. The pivot line is calculated based on the price opening of the previous day closing, and previous day maximum, and divided by 3, basically the average of the highest, the lowest, and basically the closing of the previous day. So this is the way that pivot point is calculated, and then these resistance line are basically calculated again based on the pivot line. So in a SPY trading and a SPX trading, you see those reactions very clearly. As you see again here, the R1 has got one reaction to it at 7 a.m. Pacific time, and again another 2 or 3 reactions again, even when it cuts through and it passes this line. As soon as it is breaking it, as you see, the price comes back and retest the resistance line and then go higher. So it is very important to consider these resistance lines, especially for options trading. If you're doing futures, that's totally different. But for options trading, it is so important to exit your trade in a good time. So basically, if you get in and the price reacts to this, you have to exit your position. You cannot keep your position. The thing is, if you keep, the value of the option call that you have already bought, at this point, it goes really down. It goes to even half of whatever it was here. So as you see, the price is kind of like the same between this point and this point. However, the option value is basically way lower here. So you have to be careful when you play with options. If the price is very choppy and going up and down, and the trend is very weak, in that aspect, you're losing a lot of money. So you have to be careful when you're playing with options. Options play very well if the price is moving very fast. If it's not going fast, so you have to be careful. You have to go out of the position and enter it again whenever it's appropriate. So as you see, when the price reacts to this line, to the resistance line, you have to get out. You have to wait. As soon as you see this reaction again with a long wick on this candle, you get in again. And as you see, there is a reaction and there is a slow move here. You have to get out. So you have to be careful about these ones. unless you don't really care and you have entered a call option that is very close to the in the money or is at the money, and then in that case there is a lower possibility for you to lose money when the price moves like that. So that's the other scenario. I'm not gonna go into those type of details. In this video, I'm just showing you how these resistance lines based on the pivot point are basically important and how they can help you figure out the trend and how to use them for options trading. There are so many reactions. As you see, the pivot line, the main pivot line, is actually the most important line in the chart. There are always reactions to that, and whenever the price touches that, it is rejected. It always rejects it first, and there is always possibility for the price to pass that line and to break it, but not all the time. It's not the case for most cases. As you see, there are reactions to the line and then the price goes up. So that's not the case. That's not basically happening when for the price to pass that line and to basically make it useless. There are always cases that the price reacts to that. Again, this one happens right at the opening. It touches the pivot line and it then goes down. It's actually one of the best scenarios or one of the strategies that you can use, especially at the opening for any type of a stock. If you see such reaction, that's a huge possibility for you to make a lot of money. If you have any questions, don't hesitate to contact me through my website or my channel, and don't forget to like this video, to leave any questions in the comment section, and to follow my channel. And I always create these types of contents for you to help you make money. Thank you, and I hope you enjoyed. Peace out.